Hey. Good morning, everyone. This is Financial Literacy 101, and today we'll be talking about Ericsson. Now, Ericsson has been doing a lot of great things to grow their business, and they're going to essentially rise, I believe, anywhere from 7-10% in the next couple of months or so, because they've been scaling their business not only around 5G, but we need to understand that this is I believe, a company out of Sweden that essentially been building, especially back in the early 2000s, they used to have a cell phone. Everybody ever had a Sony Ericsson cell phone? I know that I did, but they don't make cell phones no more, but they're definitely dealing with technology. And we're going to get into the stock review and tell you guys what Ericsson is all about. All right, let's get into the stock review. Let's see how Ericsson can essentially make us some money when it comes to investment. We understand that the stock market is very, very volatile right now, but nonetheless, let's get into this review. Over the past 5 years, Ericsson has been up roughly 57%, the past year 48%, the past 3 months 13%, the past month 15%, the past week 2.5%, and today they're slightly down, which is essentially a good thing. And right off the back, we see already right here, 73% of analysts on Robinhood rate Ericsson as a buy. They rate it as a buy. Let me blow that up. Rated as a buy, okay? For some of you who are not familiar with Ericsson, maybe you are younger than the age of 35. Ericsson is a really old company. Believe it or not, Ericsson has been around more than 100 years. That's how solid this company is. So let's talk about it. Ericsson engages in the provision of telecommunications, equipment, and related services to mobile and fixed network operators. It operates through the following segments: networks, digital services, managed services, and emerging business and other. The network segment supports all radio access technology and offer hardware, software, and related services for both radio access and transport. The digital service segment provides software and services in the areas of digital business support systems, operation support systems, cloud communication, cloud core, and cloud infrastructure. See, Ericsson is in almost every facet of telecommunication and technology. The managed service segment includes networks and information technology managed services, network design and optimization, and application development and maintenance. The emerging business and other segment encompasses emerging businesses, and it has Red Bee Media and Media Solution. Now, this company, ladies and gentlemen, was founded back in a whopping 1876. This is how old this company is. The headquarters is in Kista, Stockholm, okay? Let's see. They got less than 1% when it comes to your dividends, 0.75% in dividends. They're right out of Sweden, as we talked about before. Let's see if there's any headline news. But the ratings on this, I absolutely 1,000% agree on. Ericsson is a buy. Ericsson is a buy by 73%, hold 23%, and they have it as a sell for 4%. Okay, I mean, that's just a little bit there. But let's talk about what the bulls are talking about. It says income sources could diversify as licensing revenue from 5G patents. That's very important with this particular stock, that they're moving into 5G, or rather have been in 5G for quite some time. 5G patents may grow through application outside of Ericsson handset manufacturer agreements. 5G may afford Ericsson a longer spending cycle and higher equipment demand than previous wireless generations. Additionally, 5G could create more use cases for Ericsson software and services within the Internet of Things device works. Ericsson's turnaround measures are happening at an opportune time. Management-focused strategy should expand operating margin with 5G infrastructure spending, increased top-line results. Here are their quarterly earnings. As you see, pretty steady quarterly earnings. I mean, of course, any stock is going to have its dips, going to have its lows. But when I'm looking at the trajectory of these earnings, they're going up, okay? And I believe they're continue to go up. This is a very profitable stock that's under $20, guys. This is a very profitable stock that's under $20. People who essentially operate in this realm is Nokia, Qualcomm, Marvel, and Inseego, according to Robinhood. But most likely Nokia and Qualcomm. Let's continue on. Now, when it comes to when it comes to Market Watch, we're mostly focused on their performance in EPS and the analyst ratings. So the past 3 months, they've essentially been up 14%, as we're seeing here. Year to date, 13%, but the past year, 49%. Their EPS, earnings per share, there are a company operating on a profit. Not much profit, but nonetheless, they're doing very, very well. Dividends, 5 cents. That's all you're getting, okay? So I don't look at this stock as a dividend stock. That's just an added bonus. Now, essentially, if you're dropping 10, 15 grand, I know some people are just going to buy, like, I'm going to drop 100. Those dividends really don't mean anything to you. Let's just keep it real. It doesn't mean anything to you. 5 cents, come on. What you going to do? Put in your gas tank, buy a candy bar, buy some peanut chews? I don't know. According to Market Watch, they're saying that it's over. I believe Yahoo is going to have the same thing that Market Watch has been saying, that it's overrated. But I can tell you, it's still a lot of potential in this stock. And right off the bat, I'm just going to go ahead and tell you, this is a buy. Let's move on. So when I look at the history of Ericsson, okay, and I want to go back here, let's see, 2001 February, this stock was up to $110. And your main question is, Ross, could it return to that amount? It could. It could return to this amount, but I just don't know. They will have to do a lot of things in order for the stock to return, okay? Could it get up to $25? Yes, I do believe it can get up to $25. So with that being said, the outlook performance, according to Yahoo Finance, is short-term, mid-term, and long-term. We have it all going up, 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 and up. I do agree. I do believe that can occur, okay? That will occur, rather. When I look at the overvalue amount, again, Yahoo Finance has this as overvalued. I don't believe that it's overvalued. I still believe there has a potential for growth, okay? So we're looking at a lot of indicators from different websites. These are some of the platforms I like to see some of my analytics. Every now and again, I go here about the consensus EPS. It's kind of, you see what the projections are essentially at. You look at the estimated, and they're outperforming their estimated EPS according to their actual EPS, okay? For a lot of you guys, I know you looking at your cell phone, so I'm trying to blow this up as big as possible. And again, you see the estimated according to their actual, they're outdoing their estimated value when it comes to their EPS, earning per share. So that's pretty good. We got the revenue, we got the earnings. As you can tell, we need to understand one thing, okay? There's a huge difference between revenue and earnings, okay? And I've gave that depiction before. Just because you are generating revenue does not mean that you're earning any money. If you can tell, back in 2017, their revenue was up, but their earnings were down, meaning no profit. But now, 2020 heading into 2021, you can tell that their earnings, their revenue was up, and so are their earnings. So they're a company that's turning profit. That is very good to look at. When it comes to Zacks and their analyst rating, Zacks is saying this is a hold. Now, I would say this is a buy, not a strong buy, but this is a buy. I believe that Ericsson is a buy. Now, their style scores, you got A for value, B for growth, B for momentum. Their total VGM is an A. I do agree. I do agree with that rating, okay? Let's see if there are any other headline news. We see here that telecom stock roundup, Ericsson, Jupiter surpassed 4 core earnings. So they're doing very well. Q4 earnings beat on strong 5G momentum from Ericsson. Another great news story that came out in late January. Eric, what are Zach experts saying? Blah, 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 blah. You see some history over here. That's pretty much it. But we can see the sector and industry rating. They're in the top 42%. And then the sector rating in the top 50%. So that's really, really well, okay? So again, I believe that this is a buy. Let's see what Motley Fool is talking about. We're saying it's a Swedish telecom equipment and network maintenance service company. Ericsson may come with a small price tag, but the company is actually a giant. Now, we know that Motley Foods are very respectable and informational, and a lot of times these guys make people a lot of money. That's why I go and I always read on this particular website. Nonetheless, it says Ericsson market cap stands at 45.3 billion, and the company collected revenue of 28 billion in 2020. The stock happens to be cheap because Ericsson split its shares many times in the golden age of the late 1990s. So that's when we were looking at back in 2000 that the stock went from 110 then dropped because they split the stock. We're talking about a leader provider of infrastructure, hardware, and services for the global. Let me just highlight this very quickly. Excuse me. The global rollout of 5G wireless. See, they're in the global market space. The telecom industry has been championing the bid to take the game-changing step, only to have its plans delayed by the unexpected coronavirus pandemic. But the upgrades are happening again, and Ericsson is taking full advantage of the opportunity. So Ericsson is doing the damn thing. Ericsson is, should be a good investment. They have turned profit of the turn of the century when it comes to 2020. And they're doing very good things. And believe me, the reason why the stock is still so low is the same thing that Apple and Tesla and many other organizations that have stocks that are publicly traded have done. And that's splitting their shares. And you see it for Tesla, they split their shares and they came right back. For Apple, Apple is trickling up. But anytime you split your shares, and I told people this time and time again, more times than not, your stock essentially take a few hits, okay? It declines in the amount that the share is worth, but essentially it rises back up. And this is why these companies continue to allow investors to invest inside the stock by splitting it so they increase their amount of volume of that stock. That's why people do splits. You know, they do all sorts of splits, 3 to 1, 4 to 1, 5 to 1, 7 to 1. So essentially that is why Ericsson is still under $20. But in my opinion, I really do think that this is a good investment long term. Okay, I cannot express long term because for some strange reason, people will ask me, "Hey, when do you think this will reach?" I can only give you an estimation. I can only give you a somewhat educated prediction, but I can't tell you that set in stone that you buy Ericsson today at $13.60. That by June is going to be $20. I cannot tell you guys that. Okay. So with that being said, does anyone have any questions? I see there are people in the chat. No, everyone's being quiet. Just listen to me run my mouth. But if you have any questions about Ericsson or any other stock, I have a couple of minutes as I'm running here. But if not, I'm going to prepare for my other video that's probably come out in an hour or two, probably within the hour. But nonetheless, this is Financial Literacy 101. Learn money and be inspired. And believe me, long term, you will make some good money off of Ericsson. I'm out.